Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a wonderful Wednesday so far and a great week. Today we're going to be diving into our daily cryptocurrency market update where we tackle everything crypto. We've got some really interesting things to go over with you in this video. We're going to be diving into a statement that Zach Pandal, I think his name is, he's the head of the FX or Global FX and EM strategy at Goldman Sachs. Essentially made in this article is covering it, and he essentially thinks that Bitcoin is on its way to over 100k and over, and he goes into fundamental reasons why he believes it. So we'll be getting into this article. It's very interesting. I definitely agree that Bitcoin's going over 100k. I just don't happen to think it's going to take as long as potentially Zach from Goldman Sachs is stating. We're going to get into a number of things, like the fact that we have seen a lot of institutional adoption in 2021, and that has a lot to do with why the market is acting in the way that it is, and we're going to get into that because right now the market is in extreme fear. Now I don't think this is warranted. I think this is just retail, and I think a lot of the reason for this is because 2021 didn't end in a 2017 or prior to that 2013 fashion. You guys know we have followed the Bitcoin 4-year cycle theory, and ultimately we were expecting a 2017 or prior to that 2013 fashion. Yet people are expecting 2022 to play out in a similar way to 2018 or prior to that 2014, and we have kind of started the year in a similar fashion. You know, you can see that typically 2018 we started with a red candle on the weekly. Remember, the week isn't over yet, guys. You can see over here in 2014 it was a pretty significant, bearing in mind there wasn't a lot of liquidity over here, so you would have got this pretty significant red candle, and people are sort of expecting potentially we maybe enter a bear market. I don't think that's on the table. We've gone over a lot of reasons for this. I think that ultimately the game has changed. Bitcoin, it was at a $1 trillion market cap, but crypto at $1.2 trillion is playing a different game to what it previously has done, where we've been very correlated to the halvenings, which you can see here in the green lines. And of course, these are prior cycles. And one thing that is a trait, and I'm going to keep mentioning this until it sinks in, is that cycles are lengthening. And that is exactly what I believe is going to happen. So this is an article to sort of suggest that there's a lot more institutional adoption, and they play a different game to what retail does, where retail is very emotionally driven. These guys have got patience, and also very ties in very nicely with what the what Zach Pandal was saying in regards to Bitcoin reaching 100k and taking some of gold's market share in terms of being a store of value. Interestingly as well, we covered in yesterday's video the fact that there's a lot of companies out there that are holding cash. It's not going to pay them. One reason we've said that you'll see, and MicroStrategy is sort of leading the way and waving a flag here, one reason that you're going to see institutions, companies holding Bitcoin on their balance sheets is because it's going to benefit them more in terms of a growth aspect than holding cash, which gets deflated in terms of its buying power year on year on year and sort of almost hyper inflated given the past 2 years. The CPI stats that they give you are complete nonsense. They are tinkered with stats. There's something called the shadow stats, which I follow, which has inflation at a far higher rate. And companies know this, they're not stupid. People have got this idea that people in the Federal Reserve and that are stupid. I would argue that they're not. Potentially maybe dishonest, but not stupid. But that's, I'm not calling them dishonest. Well, I sort of am. So let's get into what we've got to go into. We will cover these articles in just a second. This is what we think is playing out for Bitcoin. This is why we're not worried. This ties in with why I believe we're going to have a lengthening cycle and the sort of roadmap that I think is setting out. Now, we shared this in yesterday's video. It's important. We're going to be making a tweet on it earlier. It was shared by Bitcoin Archive, and it's to do with the illiquid supply. And we're essentially saying that March 2020 and what followed was essentially replicated in May, and you're now going to get a similar thing. And you can see that's certainly confirmed by what's happening on the illiquid supply side of things. Whales buy up the dips every single time. The smart money plays a different game to retail, FOMOs, and gets footed out of these markets. They understand fundamentals, they understand where this is going, and they have the patience to get it there. Whereas retail will often, and this is why this channel is really here to hopefully stop some of that, get FOMO'd into something and then footed out of it. Whereas institutions will be patient and they'll buy the dips, sell the tops, buy the dips, sell the tops. We've gone over accumulation and distribution a number of times on this channel. So ultimately, I think that you're going to do something like this. You could drizzle a little bit and then see continuation and ultimately break to the upside. And that, of course, if Bitcoin does this and we see this return move, you will see altcoins do very well. Certainly something like Cardano that has a number of fundamental reasons why. It's a matter of time, guys. This space is only going. I am all in crypto. I would not be all in crypto if I thought we were going to have a slow, and I'm leaning a lot more heavily towards altcoins. I'm a lot more heavily in altcoins than I am Bitcoin. If I thought it was going to be a slow and there was going to be other horses out there that would perform better. You know, I really believe that this space is going to do great things this year. I think ultimately that's very tethered to Bitcoin, but I think this is the sort of roadmap that we're playing out for Bitcoin. And certainly that liquid supply and what it's doing is kind of hinting that it is indeed going to happen. And we did have this kind of drawn before we'd even got that. Ethereum looks really good. You're in a falling wedge now for Ethereum that you look like you're going to break to the upside of. You may break it, come back to retest it, but you're ultimately going to get continuation. Providing Bitcoin does okay, your altcoins are going to do well. This is another thing that I've got to show you. This is retail capitulation has hit extreme levels. Bullish signal. You want to do the opposite. Why I bring this up and why this channel is here, of what the majority sentiment is doing, what retail is doing. We live in a cruel world, ladies and gentlemen. It's a beautiful world, but it's also a world that's ruthless in the sense that when we're talking about finance, when we're talking about investing, your feelings do not count. Yeah, we live in this world where everybody, you know, we've got this idea that life is equal. It's anything but, yeah? And we've got this idea that in markets, your feelings matter. They don't. I might care about what your guys' feelings are and be empathetic towards them, but markets do not give a damn. And you've got to remember that. And when people are, often retail is used, just like how the world of sales really works, is used to dump to basically, or to exit liquidity and buying into liquidity. And this is why you want to sort of do the opposite of what the majority of retail is doing, because a lot of the time they're misinformed. And hopefully this channel is preventing you from that. So you can see this is the sort of retail paper hands ratio is what this is called. This is from Binky. You can see it over here, guys. So I'm not going to try and say it and butcher this individual's name. Update on Bitcoin. Update on the Bitcoin paper hands ratio. Ratio of young coins active in the last 6 months against circulating supply. How to read. 49% paper hands. Peak retail FOMO, diamond hands 25%, BTC in dead zone, lower level since 2015 bear market, bullish, bottom signal. Smart money is BTD. And you can see this is a bullish signal where we currently are today, guys. And what that's previously led to, it's previously sort of indicated a low within the market. And this kind of would also back up what we think is coming for Bitcoin. So when I sort of lay things down, yes, we're not a fortune teller and we might not get every call right, but what I have been absolutely right on is the direction of this market. It may just take a different sort of direction, or it may just take a different route to get to that ultimate destination. But we know where this is going, and I'm going to tell you guys time and time again, this is a technological revolution that we are still very early in. So what else have I got? This was, you know, markets fearful about interest rate hikes. This was something we showed in yesterday's video, suggesting that 6 months from a new financial regime, i.e. new interest rates being put in place, you will typically see the market actually uptick for 6 months after that, and then maybe sort of see some sort of consolidation, so on and so forth. Next article, Bitcoin 100k possible by chipping away at gold's market share, Goldman Sachs. I think it's one of the reasons we haven't got a spot ETF is because people know, like the SEC, that it's damaging to the likes of gold and other ETFs. Because Bitcoin will eat their share up, and that'll be negative for the people that have invested in those markets. So the SEC has to play this kind of balancing act. But ultimately it's coming, and what Zach Pandal is essentially saying is absolutely correct. Bitcoin has a good chance to topple 100k by taking market share from gold as a store of value, Goldman Sachs analyst predicts. I indeed agree with him. He thinks it's going to take around about 5 years. I'll read the article and then we'll wrap things up. Also, Airbnb looking to Airbnb users want crypto payment option according to CEO Twitter poll. I would love this as somebody who actually lets out properties to Airbnb, who has an income from that. This is something that I would really like. I would definitely accept crypto for people renting out the house for however long. So this is the Goldman Sachs thing. Back to that. Sorry, I jump around, guys. It's just my nature, I guess. Bitcoin BTC failed to close 2021 above the long expected 100k level, but experts believe the psychological horizon is still achievable by taking gold's market share, albeit over a more extended period. In a note released by investors on Tuesday. Goldman Sachs co-head of global FX and EM strategy, Zach Pandal, hypothesized that if the largest cryptocurrency could overtake 50% of the store of value market share over the next 5 years, BTC would increase to just over 100k, making a compound annualized return of 18%. That's a fantastic return in the traditional financial world. And this is why we're seeing, this article suggests it, there's a number of other articles. You know, I think the amount of money in terms of, you know, how much money's gone in is a lot higher than 9.3 billion. Just a lot of people are maybe investing through non-public funds where they don't have to disclose how much they hold. While the current market cap of Bitcoin is close to 884 billion, Goldman Sachs estimates the floating adjustment market cap of Bitcoin is under 700 billion, accounting for 1/5 of the store of value market. The said market is not crowded, though the only other participants of Goldman Sachs store of value is gold, which with an available investment at 2.6 trillion. So more than Bitcoin's entire market cap just in gold. So, you know, you can see how there's a lot of room for growth. Ultimately, this is coming. Despite its ups and downs, Bitcoin still managed to top Goldman Sachs 2021 returns, scorecard with a 60% yearly return. Gold is placed at the bottom in the same chart with a 4% year return. Gold and silver have been really bad, which sucks because I'm a big fan of gold and silver. I was into gold and silver way before, well, certainly silver, way more heavily into silver than I was gold, just because I think there's more room to grow there. But ultimately, I used to buy consistently, and then I found crypto and I was like, why am I bothering with this? I'm going to make far more, and it's proven to work in something like crypto that's new, fresh, and hasn't got this kind of legacy system attached to it. So this is why ultimately you're going to see institutions diving into Bitcoin. And we know that out of the 6 largest companies in America, other than Apple, most companies are very cash heavy. It's not going to pay them to be in cash. They're going to look for alternatives to store their value. And that's exactly what the guy from Goldman Sachs is essentially saying here. Crypto fund attracted 9.3 billion in inflows in 2021 as institutional adoption grew. Here we go. This is, of course, Grayscale. We've got a number of others out there like CoinShare and so on and so forth. Another interesting article here. Eventually, this is how the world's going to look. You will be able to pay in crypto, providing that governments don't really clamp down on it to kind of bolster up their fiat systems that are complete garbage. Anyway, remember, Ludwig von Mises made one of the most important statements back in the 900s that I've ever heard. Not the 900s, sorry, 1990. I can't remember the date. But he essentially said that its governments are the only people that are capable of taking a perfectly valuable commodity such as paper and making it useless. And that's what fiat systems are. You know, they're a hoodwink, if you will, essentially. And I'm currently reading a book on the history of money. I also collect historical money. So the Roman coins and stuff like that. I'm a big collector on currencies. From across the world, from different periods, and there's a story to be told there, but we'll make a longer video on that. So this was just a short and sweet update. Hopefully you guys have enjoyed it. If you've enjoyed the video, a like is always appreciated, so as a comment. I'm going to love and leave you on that note, as I better get off to the gym. Thank you very much for watching, guys. I will see you in the videos coming out later today. See you.